Hey everybody, this is Jake with another video in the technical analysis series, and today we are going to try to answer the question, what is the best indicator to use? And I'll definitely say that that is something that is completely subjective to the person trading, what their strategy is, and all of those good things. So we'll kind of split it into two different types of indicators. One I have on the left here, which is a lot of different volume-based indicators. Your anchored VWAP, which was created by Brian Shannon, who's the founder of Alpha Trends. You have the anchored volume by price, which is something that we created at TrendSpider. And then you have the on-balance volume, which is a lower indicator for volume as well, which you don't usually see that much. Generally, you're going to see a lower indicator, which is more of a function of price, which is what we have here on the right side. So kind of going through these different charts, we'll look at the left side first. And so you'll see if you are using a strategy of using the anchored volume by price with the anchored VWAP, you may think that, this is the best thing since sliced bread because, in this particular case, we can see that if we start this particular anchor from the January 21st bottom, you can see when the price finally broke down here where the price found a bid. And that was actually closing above the anchored VWAP, but actually wicking down to this big volume block down here. And so what this does is it tells us kind of where these supply and demand zones are from a particular point in time. Now, that is something that you can use without any other indicators. I mean, some people are just trading horizontal levels based on, an anchored VWAP, a volume by price, or you can use more of the on-balance volume to get an idea of what the overall trend is on the volume side of things. So here you can see the price kind of stayed stagnant, if you will. However, the on-balance volume was increasing, and then you can see what happens. Finally, the price does match that move with the on-balance volume. So that is one way that you can use indicators on the volume side. However, you can also use indicators that are a function of price, whether that's the 20-day moving average, the 50-day moving average, the exponential moving average, the 20-day or the 50-day. There's all different types of moving averages and all different types of lower indicators and oscillators like this, such as the relative strength index, the Williams percent range index, the MACD. These are all looking for slightly different things. So for example here, the Williams percent range is generally going to find divergences before the RSI. In this particular case, you can see that there was divergence with the RSI as well. And so this was something you would call like confluence between the two indicators because you can see that it's not just on the Williams percent range, it's also on the RSI, and then you had that big move down afterwards. Now, this is a way that you could also use the moving averages as well. Notice how the price caught a bid right at this demand zone, but you can also see the price caught a bid right with this indicator. So who's to say which one is right? And that's the thing that makes this so subjective because one person may have a perfect strategy using, this mix of the SMA 50 and the SMA 20. What is that? The 50 and the 20. So, someone may consider a cross to the upside here as bullish and a cross to the downside as bearish. And that could be a strategy that works for some people as well. The nice thing about TrendSpider is if you did want to test that type of strategy out, simply just crossing down or up, you could use the strategy tester to actually test that out. So I will try to mention that at the end of the video, how you can do that. But to really answer the question, there is no indicator that is the best indicator or the worst indicator. It's really how you can use that indicator within whatever rules you have, whatever strategy you have. One indicator may be giving you too many false signals, such as the Williams percent range. So maybe you want to use the RSI instead. That's a little less sensitive. Everyone is going to find that whatever indicator works for them is going to be usually based on trial and error, what you feel most comfortable with, maybe what you're able to back test easiest, such as, let's say, a moving average cross or the RSI breaking down below 30. Price indicators versus volume indicators, they all have their strengths, they all have their weaknesses. One thing I will mention about, let's say, a moving average or an RSI or a MACD crossover or some type of important move, if enough people are watching that indicator on a particular stock, it's likely going to make the market. So for example, if you've got a bunch of people looking for a MACD cross, it sometimes will just become self-fulfilling because so many people are buying the MACD. So to answer the question, there really is no, perfect way to use an indicator, or there is no perfect indicator to use. Every single person is likely going to use it slightly differently, and that's really what makes the market. Everyone's got their own style, everyone's buying at a different area, everyone's selling for a different reason, and that's what really makes the market fascinating. One thing I did want to mention here, let's say that you did want to test simply the daily, let's see, we go here, daily condition indicator, and we want to just simply look at whenever the 20 crosses up through the 50, and we'll just do, this is the EMA 50, sorry, I thought that was the SMA 50, and let's see what the return is after 10 candles. If we go and test this, let's just test it from 2,000 candles and behind, we'll see that you can see every single time this has happened. So anytime that there was a positive move, it will be green. Anytime there was a negative move based on this crossing, and then 10 days later, it's going to show up as red. We can see here the mean trade return is 1.3%. We can see the wins versus losses are exactly tied at 50%. And so this gives you a lot of information quickly without having to go and test this out by yourself. You're able to use TrendSpider to really answer the question, what is the best indicator for me? Thank you guys so much for listening in. Make sure to definitely subscribe below to check out more videos like this. And if you have any questions, please feel free to reach out at hello@trendspider.com. Thank you so much, and look forward to the next video.